Welcome again. In this video, I'll be explaining you the price action trading. We will not be using any indicators as such for this method. So the benefit of this method is primarily that it takes minimal stop loss for us to trade, and the risk reward ratio in this case is pretty high. Okay. So now for the demonstration, I have taken up Cummins India. As you can see that this is a 5 minute chart of Cummins India. I have actually plotted the resistance and support levels. So this is an indicator which is available in all broker terminals. So you can use any of your broker terminals. For this illustration, I've used TradingView, and also I'm going to use the volume indicator. So here, as you can see, there is a line. The black line that you see here is nothing but the moving average of 20 for the volume. Okay. So now, what is this method all about? So I call it the AV method. Reason being, we are looking for A formations in the price for short trades, and V formation for in the price for long trades. So method is relatively simple, and it's purely price action trading. So you don't have to break your head about using many indicators in this case. So now look at this chart. I mean, we have the Cummins India chart, which is a 5 minute chart. As you can see that Cummins India had a significant up move. Let's say from the level of 977 up to, let's say, 1017. So which is a good 2% move it had, right? So now, as you can see here, uh, when it is approaching resistance level on the daily resistance level, you can see some formation of candles with some indices of candles, as in we have some kind of doji formation here, and we have some candles with quite a bit of wicks, upper wicks, let's say upper shadow or upper wicks. And then you of course have the doji formation as well. So now this kind of patterns is an indication that the up move that the stock had might be diminishing. Okay. So now, to confirm this, what we look at is, first of all, of course, it has to match with your. I mean, this price action should be happening around your key levels. Based on my own experience, some of the key levels we could look at as the previous day high, especially for short trades, and previous day low for buy reversal trades, and also the weekly resistance and support levels, right? So in this case, this formation is happening near the day one of the daily resistances. So now this is one confirmation. It should be happening near your resistance levels. The second confirmation I look for is significant volume which is associated with these candles, right? So now the black line that you see here is nothing but the moving average of 20 for the volume itself. And what I look for is, when you have this formation with the candle having upper shadow, which is quite significant. Minimum I would expect is around 40% of upper shadow. And then you look at the volume for the same candle. As you can see here, it is more than two times the moving average of volume. So which shows that this price action that's happening here with some where the sellers are trying to bring the price down is happening with a significant movement. So I call this surge multiplier. So basically what surge multiplier means is, you look at the volume, it should be at least 2x of the moving average of volume. So in this case, it's quite significant, and it is at least 2.5x the moving average. So now these are the confirmations that we look for. And then on top of that, you have the A formation in the chart, right? So now you have this peak, and now this high is not broken, and the previous high is lower than the high that is formed here. And the next high, which is doji candle. If you have a doji candle, it's like an icing on the cake, meaning you're almost sure that there is a lot of indecisiveness at this stage. So most likely with all this volume action combined with the price action, you are going to get a good amount of down move, right? So so what we do here is we don't take a position here. We basically wait for this candle to close. The condition here is this candle should not have broken the high of the previous candle. So you take an entry in the subsequent candle. So as you can see in this case, the entry would be around 1014.6 for me at on Cummins India. So with the stop loss which is slightly above, one or two ticks above the previous high of the apex that is formed here. So I can look at typically 1020. So which means you have a 6 points stop loss here, and then you write this and as you can see that Cummins made a low of 986, which is a very good returns on a intraday trade, right? So now this method is very effective because the stop loss that you're looking at the trade is very minimal, while your returns could be, I mean, if I have to put the risk reward ratio in this case, it's at least 1 is to 2.5, so which is very good. So likewise, you can look at the long trades as well. So in case of long trades, you'll typically look for V formation on the price. We also look at the significant activity in terms of volume, and then you look for some doji and candles with good amount of lower wicks or lower shadows, which is quite significant. Minimum 40% of wick size what we're looking at. So this method is pretty effective. So I mean, feel free to use it and try your luck with this method. The beauty of this method, as I always say, is it actually reveals what's going on because we are looking at price action here coupled with the volume at certain key levels. Okay, so good luck trading. You can leave a feedback in the comments below. And of course, as always, before we start looking into the real trading, please do some paper trades. Get hang of it, and then you can look at implementing this in real trades. Good luck. Thank you again.